taking a look at COMEX registered silver stocks, we see this number continue to go down. Well, hello there, my friends. Chris Marcus here with you for Arcadia Economics on Wednesday, September 14th. Hope you are doing well out there. And in today's video, we're going to be digging into some of the metal inflows, or more appropriately, outflows out of the COMEX and the London vaults, as taking a look at COMEX registered silver stocks, we see this number continue to go down, which I will not suggest that this is a run on the COMEX, because as you see, if we go back farther, taking a look at the 10-year, or even better yet, taking a look at the 20-year, you can see there are periods in which the inventory has been lower, about 25 million ounces back in 2016. What's interesting, though, is, as we'll touch on a little bit, you see metal coming out of the ETFs, silver also coming out of the London vaults, and certainly a sharp decline over the last year and a half. Here is right around silver squeeze, where you had over 150 million ounces. And then now, as you can see, we're down to just under 46 million ounces. So interesting to see that metal continues to come out, especially as the price has been lower. Seems like there is strong physical demand out there. Whether that comes back in, we shall see. Now, a quick look at the total COMEX inventory. You can see this is including eligible and registered. Again, registered is what is available for delivery. Eligible still in the COMEX approved vaults, but not up for delivery. And you can see that number has been coming down a little bit, although the eligible has been rising, and just something that we keep an eye on. Although, again, quite a sharp drop here, and will be interesting to see if this trend continues. We have a note here from Michael Sayer, who publishes some data on this. It was nice to actually meet Michael at the Silver Symposium recently. He mentions vault totals dropped to just over 322 million ounces, lowest since July of 2020. That was when that deposit was made by JP Morgan, and that the registered totals still at the lowest level since February of 2018. Interesting note here, though, open interest now equal to 212% of all vaulted silver and 1488% of registered silver. Now, this is also happening at the same time that we see the London stockpile, which has been dropping since mid-2021. We saw another withdrawal this month, going from 950 million ounces to 916 million ounces. And what's interesting, Ronan talked about a lot of this, Ronan Manly of Bullion Star, in his recent article, London Silver Inventories Continue to Plummet. And while there are 916 million ounces in their inventory, 18,110 tons of that is held by the silver-backed ETF, so already accounted for. That's about 579 million ounces, which leaves 10,396 tons, or about 332 million ounces. Great article which walks through a lot of the data on this, which I will have in the description field below, and definitely worth taking a look at if you have not already seen that. So again, we see that there had been a buildup over the past couple of years, but right at that same point over the past year and a half, we've seen metal coming out consistently. Where it's going, well, one place certainly seems to be India, that had a record import back in July of 1,800 tons. Take a look at the long term, and you can see really quite a spike, and there has been strong Indian demand. We've read reports of India consumers purchasing large amounts of silver while the price is low. So be interesting to see what the August number comes out at, but certainly that 1,800 tons, even bigger than this previous spike here back in late 2008. Taking a quick look over at the ETFs and depositories, you can see a total of 25,679,000 ounces coming out over the last 4 weeks. So metal continues to leave these ETFs and warehouse and London stockpiles. which means that there's not a large amount of silver remaining. So, should you see a spike in demand or just further continued demand, just worthy of note that the amount of metal to underpin all of that is going lower. At the same time, we're seeing that. Worth noting, here's the silver lease rate, which has been spiking over the last couple of weeks, which means it's getting more expensive to acquire leased metal. Also, over at SLV, as Bob Coleman has noted here, the SLV shares have been getting harder to borrow or more expensive, which basically means that if you want to short SLV, the cost to do so is going up. And we have had backwardation in silver as well. So, like Vince Lancy mentioned in that call that we had yesterday, where he talked about silver, a lot of factors putting pressure on the physical silver market, even while the paper price has been dropping precipitously. So even while the price is down, showing signs of strong physical demand, and we will keep an eye on that going forward. Another thing I wanted to point out, this was last week's COT report where you can see in the swap dealers now long silver, 47,000 contracts on the long side, 25,000 shorts, so about 22,000 net long position. Whereas you can see the speculators have been getting increasingly short. Dave Kranzler of Investment Research Dynamics actually sent this over the weekend, mentioning that either the data is wrong or the conditions for a short squeeze are in place. And we certainly saw that on Monday. Again, on Tuesday, after the CPI report, basically everything was getting bombed. So silver up a little bit today, and we'll see what next week's positioning report looks like. But interesting to see that the banks and commercials are getting long here. On the gold side, we do see there has been a significant amount of gold coming out of the registered stock over the past few months, although certainly, as you can see here, well above some of the levels that we saw back in 2018, 2019, when the registered gold stockpile got pretty close to zero. A bit of a different environment right now with some of the chaos going on in the world. And should we reach that point eventually where the Fed starts to go on pause, would be interesting to see how this chart looks then. But as of now, 13.41 million ounces in the registered stockpile. Although Michael Sayer again had an interesting note here. The 100 and 200-day average rates of gold withdrawal have never been as high as they are now, and they are continuing to increase. So just another thing that we will keep an eye on. A few last notes here before we wrap up. This came out yesterday following the CPI report, showing that prices did increase again slightly in August, well up year over year in the government BLS CPI numbers, which has changed the tone of next week's Fed decision. Here, Zero Hedge talking about at least 75 basis points next week. And as you can see here in the implied Fed futures probabilities, now pricing in a 68% chance of a 75 basis point hike with a 32% chance of 100 basis points. This did get toned down a little bit as the PPI wholesale price index came in this morning, falling 0.1%, which was in line with the expectations, although again, still up 8.7% year over year, although it did show a decline rather than an increase as we saw in the CPI over the past month. So we'll get a lot more clarity on that next Wednesday when the Fed releases its latest decision. And speaking of central banking policies, here was a note from Augustine Carstens, little disconcerting as he's talking about the role of the central bank digital currencies. Short clip here that I felt was worth sharing, just as we'll be hearing a lot more about this in the coming months and years. And we'll take a listen to what he said about central bank digital currencies here.
A key difference with the CBDC is that central bank will have absolute control on the rules and regulations that will determine the use of that expression of central bank liability. And also we will have the technology to enforce that. Those two issues are extremely important, and that makes a huge difference with respect to what cash is.
It certainly is a little disconcerting, in my opinion, that they are going for further absolute control Obviously, the central banks dictating a lot of what's already going on and now trying to take a step further, but we will see how that all goes. Real quick before we wrap up, would like to thank Blackrock Silver who brought us today's video. Blackrock Silver exploring its project in Tonopah West. They had a maiden resource out earlier this year, which showed a 42 million ounce silver equivalent deposit. They've also been exploring further west, where they've been finding additional silver mineralization and recently closed a financing that is going to allow them to continue to do their exploration. Andrew Pollard of BlackRock is attending the Beaver Creek show this week. So if you have questions about BlackRock and you're at the show, make sure to stop by and see Andrew and say hello, and you can find out more about what they've been doing there. But appreciate BlackRock for bringing us this show and moving their project forward. With that said, we'll wrap up for today, but hope you're having a great afternoon out there, and I'll see you again tomorrow.